I started building my six-figure portfolio just over 10 years ago. It didn't take that long before I hit six figures. You can do the same thing, but with much less effort. Welcome to my channel, everyone. My name is Michelle Hung from the Sassy Investor, your go-to channel for everything to do with personal finances, investing, and money mindset. In this video, I'm going to be talking about how I built my six-figure portfolio in the stock market, what my portfolio consisted of, the mistakes that I made as an investor, maybe some regrets, and what it cost me by not following my intuition. So make sure you watch to the very end to make sure that you don't make the same mistakes that I made. So my core portfolio consisted of individual stocks across various industries in Canada and in US. So it was a combination of small, medium, large-sized companies, large-cap companies across industries such as tech, financial services, healthcare, consumer staples, waste management. So altogether, I had a combination of stocks that comprised of high growth stocks, like super risky in early growth stages, up to very stable companies that had a combination of some growth and that paid out dividends. So what consisted of my solid companies, the ones that were stable and were paying out dividends, I was invested in companies like Oracle, JP Morgan, Wells Fargo, McKesson, Republic Services, MTY Group. And as for my high growth stocks, I pretty much gambled with a few mining stocks. Some of them don't exist anymore, or they're like, a couple cents or practically zero. I've had a few winners where I 5x my return, and I had a tech company where I invested in its early stages and I made a 10 times return on that one. I used to work in mining and exploration, so I was pretty familiar with the industry. I took some chances in a few of the companies. Some worked out, some didn't. That's the risk when it comes to investing in these high growth, early stage companies. Now, I didn't add ETFs until later on because back then, ETFs weren't as popular and I just was really into picking my own stocks. By the way, check out my free training, how to build your 100K plus portfolio using the proven and best strategy in the stock markets. The link is in the description box below. So overall, I had majority of my portfolio in US stocks. Now at the time, the US was just starting its recovery from the global recession. And around that time, the Canadian dollar was really strong. So I converted a lot of my money into USD and I made a lot of purchases in the US market. So my portfolio consisted a lot of US stocks. So I was still missing a few key components as part of my core portfolio. Now on to some of the mistakes I've made as an investor. So because my portfolio consisted of a lot of US stocks, not too many Canadian stocks either, I should have been way more geographically diverse. So that was one of the mistakes I've made. Now, remember back then, the US was making a great recovery. The US dollar was really strong. So that was great news for my portfolio as a Canadian because the Canadian dollar was weak. So I got that currency bump as well, in addition to the stocks performing really well. I should have added more global, developed, emerging market ETFs to my portfolio. I know that now. Another mistake that I made was after I sold my holdings that I've made a lot of money on, I ended up having a lot of cash just sitting around. Now, even like buying any other Canadian banks would have been much better than the cash sitting there, or just any ETF in general. It would have been way better than my money sitting around in cash for quite a long time. That's no good because I'm missing out on dividends, I'm missing out on growth. So when in doubt, if you have nothing to invest in, just buy a couple of ETFs, broad market ETFs. At least your money is being put to work and not just sitting there earning nothing. A report came out recently and said that the annual inflation rate just went up to 3.1%. That is high. So if your money is being parked in cash right now, you are losing money. The value of your money is eroding because the cost of goods is going up. Now, just because I built my portfolio out of individual stocks, does that mean you have to do the same thing, picking individual stocks? No. Nowadays, there are way more options out there for investors, especially for beginner investors. If you're starting out, if you're not into picking individual stocks and you don't want to put in the work, I suggest you invest in exchange traded funds. Now, if you don't know what that is, check out this video right here. So now that there are more options for investors now with ETFs, that is something you should start off with. It's easy, much less effort than picking individual stocks. The beauty of ETFs is it captures a lot of the companies. I missed out on a lot of companies in my portfolio, companies like Apple, Amazon. Had I invested in ETFs back then, I would have been able to capture those gains. mistake that I've made as an investor was not doing adequate research when I started out. So I actually started investing like 15 years ago. Okay, I was dabbling in individual stocks, just listening to random news, and I ended up buying Air Canada as my first stock. So right after I bought it, I was told by my cousin, he's like my stock investing mentor. He said, read Warren Buffett books and stay away from airline companies. So ironically, the very thing I did before being educated, right before he told me that, I bought Air Canada. I sold it at a loss, so I lost a little bit of faith in investing, which is why when you are starting out, it is very important to educate yourself. And if you're not starting with a lot of money, put your money in ETFs, because those ETFs will probably not go bankrupt, okay? And we don't want you to lose confidence as an investor when you are starting out. And the reason why he said don't invest in airline companies, because their fixed costs are very high. The cost of parking them at airports, the cost of fuel, and competition is so fierce. As consumers, we don't care which airline we take as long as it gets us from point A to point B. I've never heard of anyone saying, oh my gosh, I love American Airlines. I will only fly with American Airlines. Okay, so I've never met anyone like that, and nor have I met anyone that was like super loyal to one particular airline, which is why Warren Buffett does not like investing in these airline companies, because they're not what he would describe as franchise companies. Now, a few things that I do regret when it comes to investing was not following my intuition. One of the pitfalls of following these gurus, these investing masters like Warren Buffett's philosophy of invest in what you know. Now, Warren Buffett is pretty old, okay? He's in his 90s, and he's always been really old school. So for a long time, he was still reading the newspaper to check up on stock tickers, okay? That's how old school he was. So for him, he stayed away from technology because he didn't understand it. So in him saying, I don't understand technology, I'm not going to invest in it, being like a follower of Warren Buffett, I was like, okay, yeah, you know what? Technology doesn't make sense. Just because it wasn't good for him, it didn't mean that it wasn't good for me, because I was willing to learn about and even take the risk investing in tech stocks. But it didn't just apply to technology because it was new. I made the same mistake when marijuana emerged. I was checking out the marijuana industry back in 2015 when it first became legal in Canada. And I kind of stayed away from it because all the old school Bay Street people were like, we don't know what this is. Like, tomato farmers can grow marijuana. Anyone can grow marijuana. This industry is gonna be doomed, kind of thing. They were wrong, obviously. Even though like I had some sort of hunch, I really wanted to test it out. I kind of didn't want to, I guess, be judged by my peers, or I guess in general, because back then people were still like, oh, marijuana is not yet legal. It's not fully legal yet. So that was one of the regrets I made, because it was an emerging industry. It was very new, and it was before people made a lot of noise in the media. So it was a great time to get in because nobody was talking about it yet. And then when everyone started talking about it, a lot of companies, for example, Tweed, now Canopy Growth, really took off. So kind of missed the boat on that one. So just because Wall Street, Bay Street wasn't all for it, that's okay. They were skeptical about Tesla, they were skeptical about Amazon, they were skeptical about Walmart when all of these companies came out. So what I've learned was listen to yourself, listen to your intuition. Just because something is really new, it doesn't mean it's not going to be successful. Just make sure if you are investing your money in it, you can afford for it to go to zero. Now feel free to share some of your wins, even your losses. It's okay. I've lost money in the stock markets before. That's all for today. I hope you found this video helpful, especially with some of the tips that I provided for you. Hopefully you don't make the same mistakes.